Hey everyone, Coach Investor back to another video for today. So you've probably noticed that your SoFi shares are suddenly worth a lot more. The stock is up actually in the last 5 trading days or so, over 30%. Yesterday on Wednesday, the stock was up 15%. At the time of making this video, the stock is down between 3 to 5%, depending on when you're watching this video. Of course, when the market will open, things can be extremely volatile, especially now that we're nearing the closing of the debt ceiling deal, the debt deal. Now, one of the reasons why SoFi has gone up is because of something that is mentioned in that new deal. Now, the new debt deal includes an end to the student loan moratorium 60 days post-settlement. Now, this would definitely jumpstart payments a bit earlier than previously anticipated. There's also the Supreme Court ruling against Joe Biden, and the fact that he just wants to cancel the student debt will probably not happen, and that's something that will be in the favor of a company like SoFi. Now, we also have some comments from SoFi's CEO, which we're going to talk about in just a bit, but let's have a look at the stock right now. So if we look at the graph, like I said, it's been up quite a lot in the last couple of days, but as you can see on the daily chart, we are a bit oversold right now, and that's maybe why you see it a bit dipping today. When you look at the MACD, it is now back in the bullish territory and above the zero line. When you look at the weekly chart, of course this week a big green candle, which means we will probably, a lot can happen on Thursday and Friday, finish the week above the 200-day moving average. Very, very important for the long-term trend. Now, with regards to Anthony Noto's comments, he sat down with JP Morgan at a conference, talked about the bearish report, a couple of points that were mentioned in that bearish report, which, by the way, since then the stock is up quite nicely. So he basically went against that bearish report, talked about how, well, most of the points there are wrong, the reasoning behind no new loans in Q1. We're going to talk about all of that in just a second. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. We really appreciate that. We're on our way to reach 30,000 subscribers by the end of the year. So maybe hit that subscribe button. It's free, so why not? And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So Brad Freeman here from Stock Market Nerd summarized this perfectly. Again, his Substack is incredible. I highly suggest you go follow that. So, with regards to direct deposits, they say here the strong deposit trends SoFi enjoyed in Q1 continued into May. CEO Anthony Noto reiterated plans to add at least $2 billion in deposits this quarter. He was expecting just 35% of new accounts to utilize direct deposit, but 50% of its accounts are doing so. The company has plans to continue rapidly growing its deposit base to fund originations thanks to the very high quality of these deposits, its bank charter, and its conservative leverage ratios. Interestingly, these deposits are not coming from the Silicon Valley Bank debacle, they're coming from large money center banks. That points to this trend being durable and not a temporary reaction to a systemic shock. Very, very important for the long-term durability and health of this business. Now, with regards to personal loans, SoFi continues to reject 70% of applicants and continues to tighten its credit parameters. It never got too liberal with credit bans during the pandemic boom. In other words, the rapid origination growth is not coming at the expense of credit quality. This was one of the questions that were raised after the last results, whether or not this is going to become a risk in the future. Now, with regards to no loan sales in last quarter, so SoFi's singular goal in the holding or selling loans decision is a return on equity optimization. So recently it has been able to generate a 6% net yield from holding versus 4% from selling. We've talked about that in the previous video. With its excess liquidity and conservative leverage ratios, it has the freedom to select the best yields. So that's what it's doing. It did the same thing 5 years ago when rates were rising amid the 2018 taper tantrum. I think that was at the end of 2018 or back half of the year. When conditions improved and selling yields became more attractive, it resumed loan sales once more. Noto is fully confident in capital market demand being there to sell loans at favorable gain on sale margins. He talked about the Q1 ABS deal, it's going to pop up on the screen. We talked about that in the past as well. exploding net interest income, low charge-off, comparable deals, and discussions with the demand side as evidence. And last two things here, one on the tech platform, which is Galileo and Technisys. This year, the firm is confident in growth here, accelerating towards 20% by the end of the year. And then with regards to its goals, so SoFi 5 years from now, Noto thinks the pace of quarterly member adds, currently around 400,000, could at least double by 2024, and he wants SoFi to have over 20 million members 5 years from now and 40 million total products. His goal is for SoFi to be a top 10 financial institution in the United States, with plans to expand globally from there. First in Latin America, I think they will face a lot of competition there, especially from the likes of Nubank. And of course, if you didn't know, it is in Hong Kong currently, but not with the full product suite or anything close to it. So all in all, I think we are starting to get a little bit of momentum behind SoFi. I said in the back half of the year, the market will suddenly realize, we've been underestimating this company, and with repayments coming back, this is certainly going to boost the company as well. Oh, and by the way, the Wedbush analyst, he upped its price to $3. Bravo. All in all, it's about time. It's about time Wall Street notices the power of SoFi. It's about time the stock is moving in the right direction. Of course, so long as the business is executing and doing well, I'm fine. I'll be continuing to accumulate shares so long as the business continues to execute. So that will be it for this video. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, give it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.